Welcome to Fintech Impact. This podcast is an exploration of the financial technology world, interviewing different fintech entrepreneurs about what they do, their story, and what their impact is on consumers, incumbents, and the industry as a whole. Here's your host, award-winning financial planner, university lecturer, and writer, Jason Pereira.
Hello and welcome to Fintech Impact. I'm your host, Jason Pereira. Today on the show, I have George Bordianu, founder of Balance. Balance is a cryptocurrency service that enables people to buy baskets of cryptocurrencies all in one place. Instead of going to multiple exchanges, you can purchase up to 8 of the major cryptocurrencies and have them very securely stored. And with that, here's my interview with George. Hello, George.
Hi, how are you?
Good. Thanks for coming in today.
Thank you for having me here.
So George Bordianu of Balance Now. Tell us about Balance Now.
So Balance is the simplest and safest way for people to buy a diversified basket of currencies. What do I mean by this specifically? About a year and a half ago, we kind of wanted to, get into the space and learn a little bit more about digital assets. The first thing that I wanted personally to do was to set myself up with a diversified portfolio that allowed me to track the market. Funny enough, that process turned out to be pretty painful. Having to open multiple exchange accounts, potentially integrating with other pieces of software. So we said, how about we forget all that and we build something simple where customers can effectively select an asset mix, sign a contract, pay an invoice, get a monthly statement, and that's about it. Canadian dollars in, Canadian dollars out.
Okay, so that's interesting. So we're going to talk about that portfolio approach and what you support shortly. So tell me about the history beyond that. What did you do before you got involved in Balance?
So my background is fairly technical in nature. I was born and raised in Eastern Europe in Romania, completed a bachelor's in computer science there. And about a bit more than a decade ago, I started getting involved into the whole VC funded startup ecosystem. My first serious gig was with this Paris-based startup called Silentail. Basically, I ended up spending 3.5 years with them, going through a variety of positions all the way up to director of platform. Eventually left and co-founded my own startup in the social space called Your Extra Life. I was the founder and CTO of that one for a few years. Later down the line, I ended up in Toronto working for the Toronto-based 500 Pixels. If you're into photography, spent a few years with them. And then basically last summer, I figured it's time to take the training wheels off, so to say, and decided to give it a go.
This startup thing looks interesting. I should try it myself. Good. So basically, this was born, as so many things are, out of frustration, right? And that's where it came from. Okay. So this is interesting. So yeah, most of the approaches I see to, I guess you would technically be an exchange, would you not? Or do you see yourself as an exchange?
Not necessarily. So we are effectively trying to build a self-directed investment platform. Now, obviously, there's a few pieces and key steps involved in getting a product like this off the market. One of them being financial advice. We have to limit ourselves at the moment so that, we don't give any sort of buy or sell signals. We don't have any sort of preset packages or anything of the sorts. We are building towards that destination. That being said, to answer your question, we don't maintain an order book behind the scenes. Clients effectively end up trading against our own desk.
So essentially, if I'm acquiring these, I'm going to Coinsquare, Coinbase, whatever it is, transferring it to this is basically transferring it to the wallet here, and essentially it's a diversified portfolio. Pretty
much. One key piece that I would want to mention from the get-go. You did say earlier that this kind of started as a scratch your own niche out of frustration. Most services that we found online at the time they were trying to tackle this problem, in one way or another, they ended up building financial securities behind the scenes. So the number one requirement, which was we're not going to compromise on this regardless of how painful and hard it is to build this company, was we want our customer to retain the full title on the assets from the point of sale.
Okay.
So when we tell one of our customers that they have 0.1 Bitcoin in this particular wallet address, it means that that wallet address exists with 0.1 Bitcoin in it, which was delivered at the time of you signing and running the trade through us.
So you're not taking ownership of yourself in any way, shape, or form, and then allocating it to their account.
Pretty much.
Okay.
So there's no pool of money. We don't commingle. We don't do anything anything like that behind the scenes. We maintain fully segregated sets of wallets for each individual client, which is a bit of part operational nightmare and part a really complicated technical problem.
That's a lot of wallets.
That's why we're here.
Yeah. So let's talk before we go down that path. Let's talk about the currencies you're currently supporting.
We went for pretty much anything that's, we would argue, that's stable enough and has high volume in terms of liquidity, so we can get in and out of the market whenever the client needs us to.
Okay.
So usual, suspects, Bitcoin and Ethereum, and Litecoin, Ethereum Classic, Bitcoin Cash, Dash, and then Ripple and Stellar Lumens, which are two of the, most interesting projects out there,
Fair enough.
to say. We've kept this fairly, we took a holistic approach. We looked at the market. We went through pretty much every project with a market cap of over 150 million. Team founders, white paper, technical paper, code on GitHub, whatever it is. There's a lot of interesting stuff that's happening in the space. There's a lot of really promising projects. We wanted to stay away from that whole fat tail of coins until some of those promises actually get delivered on.
No kidding.
Focused on what looks more like commodities.
Yeah, I mean, was a statistic over 50% of the ICOs from last year are now bankrupt or something like that. So, yeah, it's a very, very long tail. So you made an interesting point there. You talked about, what was the threshold? It was 150 million, was it? Or
150 million was internally for our own assessment, effectively.
Okay.
But again, it's a shifting market.
So you're looking to basically add, as different coins reach certain levels of prominence, you would basically add them to your platform and allow people to diversify that way. So what's interesting about your platform, looking at it now, you're talking about, again, being able to buy a diversified portfolio. So you've basically made that easy at a button click, haven't you? I can see like different weighting formulas.
Pretty
Can you
much.
speak to those?
The way that I currently see this market is there's a lot of parallels that can be drawn between the traditional financial industry and the digital asset space. It's not a one-to-one matching by any means, but the core state of the market as far as digital assets are concerned, you have all these trading and exchange platforms that are launched out there in Canada where effectively you have to create an account, pass through identity verification, potentially more than one time, and then effectively watch the order books and run your trades one by one. This is the equivalent of I'm going to open up a brokerage account and I'm going to buy my ETFs or my index funds one by one to come up with a portfolio.
Direct indexing, for lack of a better term, yes.
Direct indexing, that is the proper term.
That is the proper term, yes.
So what we wanted was, okay, that's great, and there's definitely a target market for those, a pretty huge market. That's not the space I want to play in. We wanted to bring a level on top of it, another level of simplification for the early majority market, where in the same vein and manner as Tangerine investment funds or Walt Simple, for the lack of a better comparison, although we don't do the robo-advising bit just yet, we wanted to give people the ability to say, I want to, set myself up with a portfolio, and even if I pay a slightly higher fee than what I'd normally end up if I were to run my own trades one by one, I get the peace of mind. And that's fairly important. We're targeting the, upper middle segment of the retail market. So effectively, people that say, I want to get exposure to the space, I don't want to worry about digital wallets tonight. I'd much rather worry about where my dinner reservation is.
Absolutely. So you mentioned you're not getting into the robo-advising piece. Can you mean what does that mean exactly in your mind?
So for us, one of the most challenging pieces once we started this business was understanding exactly where the regulatory line is or could be in the space. We understand we're operating in a regulated space and we fully embrace it. It's a good thing. It offers protections both us as businesses and consumers.
So often not said by people in the crypto space, but yes, you got to deal with reality. Right? And that's anytime you touch any kind of money, you're in a regulated space.
If we can make a quick parenthesis.
By all means.
I'll get to answering your question too, but the way I look at it, there's a finite set of viable business models in the financial industry that could legitimately make money, whereas there's an infinite number of scams and con games that you can run.
As we're finding out, but
you can never run out of those. So without regulation, the free market would effectively push everyone towards, if I'm to be competitive in the space, I have to compete with the scammers and with everyone else running fraud, right?
Well, and this is the thing, that regulation creates a sense of security, rightly or wrongly, and only enlarges the market, quite frankly. So I know many people disagree with me on that, but whatever. So yes, go back to your robo-advising space, yes.
On the robo-advising side of things, we are currently not at a stage where we can or realistically even want to give financial advice, especially in digital assets. The whole asset class is risky enough as it is.
Yeah, no kidding.
If we start getting to buy and sell signals. So that being said, unlike robo-advising platforms such as Wealthsimple or Betterment or Wealthfront or any one of those, we cannot talk to our clients about their risk tolerance. We cannot talk to our clients about their investment horizon. We cannot talk to our clients about their other traditional investments and their existing portfolio and exactly what are they looking for to get out of this product. We are here just to provide access. To say, look, you learned about it, you kind of understand what Bitcoin and Ethereum or digital assets in general, cryptocurrencies in general are, and you want exposure to the space, we can help you get that done with a few clicks. If you don't know where that is, or if you think it's too risky, I'm not going to go through convincing you, through the process of convincing you. There's a lot of companies in the space that are tackling the education aspect of it. We see that more of a partnership rather than a competition.
Yeah, I mean, the reality is that you're crossing, that's a very fine line between basically discount brokerage and full service brokerage.
That's
right?
exactly
So I totally get that. So, but you do offer 3 off-the-shelf allocations, which make perfect sense. You have an equal weight between all of them. You have a market cap weight and you have a Bloomberg Galaxy weight. So essentially you're giving people a tool set to determine a balance based on whatever preference they want there, or they can do their own custom one, correct?
Right. So,
exactly.
and we effectively put those on the site as presets. Like you select one of those presets, it just drags the sliders for you and the set positions, and then you can continue customizing the portfolio on your own. We don't make decisions for the customer in saying this asset mix that they want to do, and we'll send them straight to a checkout page, even in our software. So we're really, really careful when building our product about the specific aspect. We want, and we do encourage everyone to go through some of the research and figure out at least high level how they would want their portfolio distribution to look like. If at a certain point in the future we do manage to get registered with the Securities Commission for whatever would have to be registered for
whenever they come up with registration,
whenever they come up with registration, we would want to provide those low risk, medium risk, high risk prepackaged portfolios.
Absolutely. But, you can base that off historical volatility and any number of factors. So does this service currently offer any kind of rebalancing service as well?
Really, really good question. So we do have the tech to execute it behind the scenes.
But
there is a but. And this is one of those, really, really fine lines. At what point do you consider the services contract that the client has with me to be an investment contract in and of itself? We did reach out to the Securities Commission in Ontario. Thankfully, they have a regulatory sandbox exactly for this kind of businesses, where basically they say, look, if you're coming out with a new model that you want to explore over here, just come talk to us and we'll understand a little bit more about what exactly are you doing over there and what business registration requirements you might be triggering. And then we can, help you, guide you through the process effectively. We reached out to them initially with rebalancing as part of the, one core feature of the product. It could be argued, depending on how it gets implemented, whether it happens automatically or whether there's a button on the side that the user gets to click on their own once every 3 months, or however that gets done. It could be argued that the moment we tag rebalancing to the services contract in itself becomes a bit more than just the sum of the parts.
Technically qualifies as advice at that point.
Basically. So we decided to just stay on the safe side of things, remove it for now. We do have the tech built. If we do get all the registrations in place, well, that's definitely on the roadmap.
Yeah, I have a little bit of difficulty with that article, with that general position, just simply looking at how you've done it. If someone determines their own asset mix, they want to return, basically rebalance their own asset mix. That's them, right? If you basically provide off the shelf equal weight market cap and Bloomberg, it's not you determining that mix, it's those different factors. So yeah, it's a fine line. It's an interesting debate. No, okay. So talk to me about custody. You boast military grade security. So talk to me about what that means.
So this was one of the hardest pills to swallow when we started the business. As with every startup, you start with this optimistic outlook and positive. How hard could it be to maintain fully segregated wallets for each individual client? I'm a technical guy. I can figure it out. Yeah. Really, really quickly realized that if we wanted to do that and to do that in an efficient manner where we can actually, charge you a low fee that allows us to be competitive in the market and turn a profit, we'd have to build our own custody piece from the ground up. We initially started thinking we're going to work with a third-party provider like Kingdom Trust or Gemini Custody or Coinbase Custody. There's literally maybe half a dozen solutions worldwide that make sense. We've analyzed all of them. We've talked to a few of them, they're not built for this specific use case.
What was the big issue that happened there? What was the big holdback for them?
So usually there's a few parts that come into play into making that decision. One of them is that the space is still fairly early and there's no insurance for assets that get held in cold storage.
Fair enough.
Because of it, we said, well, we want to basically maintain potentially more than one collection of fully segregated wallets for each individual client. If I have someone come in with a 7-8 figure account, I want to split it into 50,000, 100,000 buckets, whatever it is, and then manage that as one collection, and it's fully transparent to the client. No third party want to.
They're used to dealing with institutional, large scale, single purchase, single wallet type ventures. So that makes sense. They didn't want to do all that heavy lifting. So you have to build it yourself from scratch. So tell me about that journey. How much of a pain was that build?
It started off quickly, and then it tapered off. Like with a bit more pain and work than we thought it would be. We effectively went idea to proof of concept within 7 weeks. I'm a technical guy, so again, this is what I do. So I wanted a solution. I'm like, can I build something where I would be comfortable putting my own money in? I'm not comfortable keeping money with exchanges. I'm not comfortable with...
I would say that you should build something that you'd be comfortable putting your grandmother's money in.
Pretty much. So I started with mine. Now to turn it into something that allows me. So I don't have my grandmother. I actually have my mother signed in as a client.
Okay, all right. Now you really have to deal with it. Okay, fair enough.
To take her own money as a client, it took us about another year of work.
Okay,
behind the scenes.
Good stuff. So basically, you're offering this direct to consumer first off, but I'm guessing you're also offering this to other companies as a B2B play, or you will be?
We started recently. So it turns out, so we built this whole custody solution from scratch, and there's no blueprint over there of how exactly should a custody solution for digital assets look like, or here's how some other company built it, or just a few random bits and pieces of, like this.
Everyone figured out what worked best for them first, right? And then moved on.
Pretty much. Yeah. So we started with the whole, we want this thing to be geographically distributed. We want the access to be access controlled. We want everything to be vaulted. We want all the keys to be generated and maintained offline for the lifetime of the key. So your wallet never gets put to a device that gets connected to the internet or any network. We wanted all the transaction signing to happen offline. We wanted hardware security modules, that were past a certain standard. So even if I get a screwdriver in, I try to physically tamper with the circuit, you just erase itself, and then we can restore from paper backups. So there were a lot of requirements that came into play into building this custody solution. Once we got it out there and we started doing a bit of buzz on the retail side of things, we were getting inbounds on the website in one of our lead capture forms. We started getting crypto funds. We started getting family offices. Wait a minute, you have a secure storage solution. What's happening over here? How do I hold my assets with you? I figured,
that's a big problem, right? I mean, you start putting a lot of money in, you don't want the responsibility of it. How do you handle it? And you can run your own full node for all these currencies, and that's its own challenge. So, describe for the audience what deep cold storage is. I mean, we've had a conversation about it, and I always find these amusing, but by all means, give me the definition.
So the definition of cold storage is effectively your keys never get put to a device that gets connected to the internet or any other network.
Yep.
Ideally. So the keys get generated securely and they stay offline, so to say, for the lifetime of the key. Now, why would you particularly care about this aspect or want to do it? Which is, the technology is some of the coldest and most impersonal thing to sell to people.
Yep.
But unlike the traditional or fiat money, so to say, if someone transfers, your Bitcoin out of your wallet, there's no one to call and say, reverse this, please.
Yeah. I've always found it so amusing when first hearing the definition of deep cold storage that the most technically minded asset class ever created relies on paper backups as the most secure form of security. And it's such a cool, it's such an irony. And I get it, because the cost of failure is just so great. It's basically, you're done. There is no recourse. So I totally get that. So you also boast the lowest fees worldwide, or at least so you claim. Can you talk to me about those, like the minimums, the costs and the setup costs and all that, what that looks like in comparison to competition? So
the way we tackled this was basically we found that our customers were going through two major paths, so to say, to figure out a diversified portfolio. Path number one is I'm going to create accounts with potentially more than one exchange and run my own trades. Or path number two, I'm going to do number one, then I'm also going to integrate with another service on top of it. There's a few of those, CoinCube, HODLBot, and so on, where effectively they control your trading account and they trade and run and build your portfolio and do the rebalancing and everything through the public APIs that are exposed. extremely dangerous, security model there, because you leak one account in one place and now your money
the entire thing's exposed. Yeah, everything's any kind of centralized server is a honeypot for that sort of thing.
Pretty much. So we figured, could there be a third way to do this that doesn't involve running my own trades, but that would be competitive on price with running my own trades? Now, obviously, we had to turn the pricing model on its head a little bit too. Whereas most exchanges basically monetize you when you deposit money into your account, when you fund it, before you run your trades, and then per trade. And then when you withdraw money out of your account, we said, we're going to do free funding, we're going to do free liquidation, we're not going to have any sort of lock-in periods or anything of the sorts. We're not in the business of locking people out of their own money. We will charge you a flat $250 setup fee, I guess charged once per account. We're bootstrapping a business, and also it turns out that it's a really good way to qualify the clients that are coming in.
Gets rid of all the tire kickers very quickly, doesn't it?
Pretty much. But then you can fund your account as many times as you want with any sort of amount. We're going to run the trades for you, make everything transparent. We're going to charge you a flat fee per month if you decide to hold it in our possession. If you say, I want my digital asset cash, so we call these collections of wallets that we maintain digital asset caches. If you say, I want mine to be shipped home, I want to keep it under my mattress, fine by us. We made our $250, no problem. You can still, not at the time, but we are working towards it. You can still get home one day, hopefully, and open it up, type in a password into our mobile app, and continue using the same services and everything as if you were to hold it in our secure cold storage.
Okay.
So now, as far as the pricing is concerned, we started really, really high up for the initial set of clients. Thank you, by the way, for supporting this business early on.
Nothing like early adopters.
We've lowered our prices fourfold since we started.
Oh, wow. Okay.
The self-serve platform that we recently soft launched at balancenow.ca, effectively, we charge 3% a year for the first $10,000 on the retail side of things. 2% a year, it's a tiered system. For the next $40,000, so $10,000, 1 to 50,000, 1.2% a year for the next 50,000. If you come with more than 100,000, now we can talk custody pricing. For custody pricing, we charge 0.5% a year, or 50 basis points if you're used with that terminology.
So essentially what you're basically doing is almost doing an asset management fee like is more common in the investment management business.
I charge for the cold storages because we don't do anything else on top of it.
That's the thing is you're basically charging the money for the length of the time that you're doing something for them, right? It's not transaction based per se. It's basically, you're providing a service, you're going to get paid while you provide that service.
So here's what it is. As far as there are some intermediary fees, so you hinted right at that one. There are some intermediary fees over there for running those transactions and network fees and so on.
Yeah, those can't be ignored.
Those can be ignored, but we pass them fully to the customer.
Yeah, so you're not using that to monetize. You're not throwing on like an extra 20 basis points or whatever it is on top of that.
Pretty much. So so those get passed. Some of them get passed. Some of them get eaten up by us, which is why we have that $250 setup fee. That's part of what that's supposed to cover.
Yep.
We charge effectively for our services. So the end of the day is if you want to buy some Bitcoin and have it sent to your existing wallets, you will get the quote from us, and most likely there will be a spread there because you won't be keeping it with us. So, we won't get to monetize you.
Yeah.
If you do choose to hold it in our secure storage, we're going to pay a monthly fee for that one.
But unlike most other places where the value proposition is that we are going to give you access and we're going to charge you for access, your value proposition is we want to provide value for you to keep it here and to manage it. Because you're not this person who's looking to flip in and out of Bitcoin every 5 minutes. You're this person who wants to kind of buy and hold or buy and invest in a longer term than 5 seconds in this asset class. And it's interesting. One of the things you hit upon, given the diversity of currency you have, one of the, you absolutely nailed it, the pain of going through the KYC process. Multiple exchange. Oh my goodness. I mean, I don't know how many exchanges I've signed up for now just to play around with them. And then I do have a little bit here and there, but some of them I just gave up. I just said, enough's enough. I don't want to do this again. So what do you think, what have been the biggest challenges you faced altogether in starting this company? Let's put people on the spot.
Quite a few. So I'm, it's kind of is juggling multiple balls. I'm trying to figure out which one was the most pressing or the most painful one. I would argue the legal and regulatory side of it.
Yeah.
So I didn't, like when I understood that it's a regulated space, I came with a fresh set of eyes.
You don't understand it's a regulated space until you deal with the regulators. It was funny. I had a friend once who pitched the idea of starting an online bank, and I said, not a chance ever. And so he went to investigate because he thought it was doable. And he came back, he's like, oh my God, I've never seen anything like that. It's like, yeah, no kidding.
Yes. So I took it as with everything. I approached it with a technical mindset. So I figured I need to understand this deep enough that I can have an informed conversation with whichever government arm is regulating this. So this applied to the securities aspect of it. This also applied to the remitting money aspect of it. Again, we're Canadian dollars in, Canadian dollars out. We fall under FINTRAC's oversight. We pass through the same stuff. Let's with FINTRAC, it was an even more interesting conversation because we did send our business model to them. One of their officers went through our flow of funds, business model, bank account, set up everything, and basically said, like, look, as of now, which now was about a year ago, you do not need to register with us as a money service business. So we did, well, on one end, we did have that decision. On another end, it was pretty clear where the space was moving. So, like, that being said, here are some proposed regulations in Part 1 of Canada Gazette. So you're better off if you build a compliance regime.
No, it's difficult. Everybody's still feeling their way out. And I do commend the OSC for basically doing a smart move and basically setting themselves up with a more or less incubator of ideas so people can start coming to them with that, because it's much better than having a bunch of people stare back at you and say, what? So overall,
I do by all means. So I do want to mention one thing, like one thing in particular that I liked about the Launchpad team over there, because I had the chance to work closely with them for about a year. Here's what surprised me. I expected that we would drop in and they would say, okay, if you're building this, we're going to look at the product and we're going to look at the software and we're going to look at and control every single aspect of the creative process, so to say, over there. They said, that's not our job. Our job is to make sure that the retail investors in Canada don't get touched and don't get touched by something that doesn't make sense, that could potentially put their own funds at risk. So build it, then come validate it, give us a presentation. We're going to tell you this feature doesn't work, this feature might not work, or whatever it is. We're not going to tell you how to build your product. We're not going to tell you how to run your business. I was so pleasantly surprised about that.
Which is a great approach, quite honestly. I mean, just simply like, we don't know what's what yet until you show us what you're building, and then we'll tell you what's wrong with it and ask questions along the way. And that's the way it's going to be, right? And even then, I mean, they've been very, to their credit, they've been very open to new ideas of how they can basically solve problems that they were, or reassess old assumptions of how business was done and ask, okay, you know what, maybe it doesn't have to be done that way. Maybe it can be done this way. We're just used to it being done the previous way. So I do commend them for that. So overall, if you had to sum up what you felt the biggest value proposition you offer, I mean, it seems like there's a couple that come to mind here. Like, what in your pitch, why you versus everyone else?
There's a couple. So the first one I would say is simplicity. I am specifically looking at the early majority market, so to say. We've signed clients for our business obviously, as any business starts, we started with our own friends and family and extended social circles.
They didn't have $100,000 minimum, right? They didn't. Fair enough. Maybe they did, lucky group, but people.
Do note, we do have a $5,000 minimum on retail.
Okay, fair enough. Because that was the custody, was $100,000. Okay.
So that's what it is. But we do have some customers, my brother and sister-in-law, mother, father, some people over there
exceptions.
They would have not gotten into this space and they would have not set themselves up with a, Bitcoin, Ethereum, Litecoin portfolio in the next 5 years, if not for a service like this.
Oh, they wouldn't have even heard of Stellar or Ripple or anything like that for a while, right?
My mom would have, she's definitely not comfortable with opening up an account on Binance.
Yeah. No, that would not work. That would definitely not be the case.
So simplicity is one. The second aspect that I want to emphasize is the fees. The fee structure that I mentioned, we start at 3% retail a year. If I'm to contrast this, say I want to build a basket of the 8 that we support in whatever sort of proportions make sense for you. If you're to build it through a trading and exchange platform, we're most likely going to end up paying 2.5% if you fund it with Interact.
Yep.
That's one. We're going to run 8 trades just to buy the basket. Trading platforms usually charge anywhere between 0.2 and 0.4, 0.5% per trade, depending on whether or not you're the market maker or taker. So put it another average of 8 trades at 0.25, that's another 2%. You want to liquidate your assets, take some stuff out, another 2%. That's 6.5% straight out of the bat. That's more than 2 years of my service. Yeah. If in 2 years of my service, the peace of mind and you get to run your own trades, which is, so I'm paying more than double than what I'd pay through Balance to set up the same stuff, and I have to do the work?
Yep.
That doesn't necessarily.
It's not overly surprising too. I mean, it's such a windfall economy for this, right? Like everybody's racing to get into it, or was more so back when it was pushing 20 grand. But at that point, when everybody thinks they're going to get rich, they don't care about cost, right? But as this industry matures, there's definitely going to be pricing pressure, and the bigger players better build that scale, because otherwise they're going to suffer a lot of losses, a lot of outflows if they don't.
That's kind of so. We went with the most aggressive pricing structure that we could realistically come up with on top of our technology that allows us to still maintain a profitable balance sheet. So now if someone else comes into the market, and there's like every now and then you see those free trading, free funding, they're burning venture capital money. So I'm saying
hey, I like taking discounted rides with Uber, okay?
Right. Well, as long as Lyft does it as well, too.
Hey, you know what? I just know that I'm getting cheap rides everywhere. So as long as there's two, and that's some competition.
Right.
Yeah. One last question I ask everyone. What excites you the most about what you're working on, the industry, the space in general? Like, what gets you out of bed in the morning to deal with this?
So I'm going to answer this from more than one angle.
Go right ahead.
One angle is the personal aspect of it. Again, I come with a strong technical background. So for me, the finance space, as far as the systems behind it are concerned, like rebuilding effectively a back office from the custody piece up, it's extremely exciting from a pure engineering point of view. You combine it with digital currency, which is a nice combination of money and cryptography. And this is where I want to spend my day working on from a pure engineering and business aspect of it. Now, looking at the target market, what excites me about this, and we've set our goals internally along the lines of, we want to see this happen in the market. We don't care whether we do it or one of our competitors or whoever else. Right.
Fair enough.
I think digital assets could unlock the same kind of tools and the same kind of access to financial instruments that institutional players had up until now, could unlock that for retail. I'm not necessarily, I don't know if I'm doing justice to pitching this, but our stated mission is effectively saying, let's take all the stuff that the big guys had and they had available for decades and decades, and now make it available to the individual on the ground in a be your own bank kind of manner. Now, obviously, this only makes sense up to a certain point. There's a benefit in saying I'm gonna, let someone else take custody of my assets or take care of my money. But we do think there's, the balance, the pendulum currently has to shift a bit from the institutional players more towards retail. So this is what we're trying to do. Now, some of that tooling, I can't just take out an engine, order routing kind of deal and just package it and try to offer it to retail individual, because they won't know what to do with it.
No, it's not built for the retail individual.
It's not built for retail. So some of that tooling has to be reinvented. Some of that tooling has to come with an easier, like a smaller set of abstractions on top that they can actually wrap their head around and use it. But that being said, the blockchain tech does put a bit more power into the hands of the individual. So that's what we care about.
Excellent. Well, thank you, George. That was great, and I'm sure everybody will appreciate this. And for anyone looking forward, it's balancenow.ca, and you just went live when, Reese? Like it was
last Wednesday. We did a quick internal announcement, and then we went off and went to catch a little bit of sleep.
So last Wednesday, we're currently recording this, a little bit of sleep. That's funny. We're currently recording this the middle of October, so this will probably air towards the end. So you'll have had a little about 3 weeks. So yeah, I encourage everybody to take a look.
Thank you so much. Hopefully no bugs by the time you visit.
Is that a promise? No. We'll see. All right. Thank you. So that was my interview with George from Balance. Hope you enjoyed that. As always, if you enjoyed this podcast, please leave a review on iTunes, Stitcher, wherever it is you get your podcasts. Until next time.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at fintechimpact.co.